On this episode of Industry Relations, Rob and I talk about market-based fear and reality-based optimism. Let's go. This is Industry Relations, a podcast that's at the intersection of real estate and technology from an insider's perspective, with Rob Hahn and Greg Robertson.
Hey everyone, and welcome to another episode of Industry Relations with Rob and Greg. For those of you watching on video, as you can see, probably today is our no hat day. I am your co-host, Notorious Rob, and with me, as always, Fab Robertson, everybody.
Fab Robertson. Good Lord.
Woo!
Yeah, hola, Rob. How's it going, man?
Hola.
I'm coming to you from remote. I'm in a hotel room. I'm traveling, so apologize for
a hotel room here, in like Belarus, Hawaii. Like, where are you?
I'm not gonna. I can't really reveal that. Right now, okay? I'm gonna keep a little mystery.
I see. Ooh, mysterious. Little did you know, Greg Robertson is negotiating the peace deal between Ukraine and Russia, as we speak.
Exactly. A little subtle diplomacy here. For sure. But I'm like, looking at, I should have wear a hat. Like, I don't know about you, but like at a certain length, I think I've talked about this before, it's like, I get toupee hair. It looks like I have a toupee. So I'm going to somehow get this cleaned up before mid-year.
But we want the truth to be out that Greg Robertson is not wearing a toupee. He and I both have all our hair. That's right.
So that's
which, by the way, we probably pissed off like 30% of the male, population that's listening to this. But sorry, guys. I mean, it's I like the bald look. I wish I could, pull it off.
The only things we have in common is our hair, right, Rob?
All right. Well, hey, thanks for doing this while you're on the road, because that's not necessarily an easy thing. But I think in the pre-show we're talking like there are all these different topics we could talk about. We keep looking for a happy topic and keep failing to find the happy topic.
Well, you just came off the what did you call it? Hashtag demotivational tour. What did you call it?
Yeah. Somebody called me that once. That's how I came up with it. That I'm the best demotivational speaker in real estate.
I mean, you might have made a new market segment. You got Tony Robbins and Tom Ferry.
That's right.
And then Rob on.
Where they're like, just go get it, and you can do it. And I'm like, maybe you can do it. Like, yes, but the macroeconomics are doing this, and demographics are like that, and I don't have to tell you, that's what I'm seeing.
That's a niche. It's a niche, man. Everybody wants a niche. Good for you.
Yeah, I guess. So, but having said that, I think, something that you and I have been kind of, offhand, just in our conversations, just sort of noticing, is it's obvious, that this market fucking sucks this year.
Yeah.
Right?
Yeah.
And it's having some, I don't even know what to call it. Like, we'll call it like ancillary effects, like secondary impact. So I'll give you the context behind this, right? I'm talking to a buddy of mine who's, was a very senior executive at a very large brokerage. And we'll just leave it at that to protect the guilty and the innocent.
Protect the innocent.
And he was telling me how his job sucks right now. Like the last few months of his job, because he's like one of these guys who loves their job, loves agents, loves everything about it. And it's just the last few months has been really, really shitty because his day is basically spent dealing with agent complaints about the most random shit. Just, like agents who were like great, before. Now this year, they're just complaining about this, complaining about that, complaining about some vendor, complaining about some technology, just bitching, complaining, right? And we thought, does it have to do with the fact that maybe the market is so bad? I think the latest, I don't even know if anyone has real stats behind this, but my understanding is that most brokers, most agents are down somewhere between 20 and 40% for the year.
Jesus.
Right? Because the market itself is down 20, 40%, depending on where you are, right? And it's just creating this anxiety and this tension and this stress, which is coming out, and like complaining about cloud CMA. You know what I mean? Like,
wait.
Have you heard anything like that? Have you seen anything like that?
Crazy.
I know, right? No one ever complains about cloud CMA. I mean, have you heard anything like this?
Oh, absolutely. I mean, and what I was going to say is like, first of all, like look at like the cuts that Open Door just made. I mean, another cut. I mean, these guys have gotten
Right,
that's got to be
right,
close to the goddamn bone, right? For sure.
right,
Look at like Redfin, right? Redfin
right.
was another cuts there. There was a recent article put out by Zillow talking about how when you ask kids, or young people how they think they're going to buy a house, is that they're going to win the lottery. Um,
Right.
and you talk about I think it was Robert Refkin, the Compass CEO, talking about how buyers will deal with the higher interest rates, but sellers won't, right?
Right.
And then the real thing to me is that, and it's just a little bit, and I almost hate saying this out loud because I don't want to manifest this at all, but I think the narrative was before, okay, hey, 2023 is going to be tough. We've got to get through this. 2024 Q1, that's when we're going to start seeing some things emerge. And I'm just
I've
starting
heard
to
that a
hear,
lot.
but the narrative is starting to change, and the change. God, again, I don't want this to come true, but it's like now a lot of people are saying, "Hey, 2024 might not be better," right? And I'm even hearing
Hmm.
echoes of what you kind of predicted of 4.5 million, dip. I mean, peak this year,
Yeah.
right? Which would be
Yeah.
way not unprecedented, but for a long ass time, right? So, and it's like it's almost like what was that old Jimmy Carter thing that the country's got to get out of this malaise, or I forget the
Yeah.
actual term he said, but yeah,
Yeah.
it's tough out there for a lot of people, and this inventory just sucks, right?
Right. And it's everyone's pointed out, like Mike Simonson's constantly talking about this, like inventory is awful. And, and I think to your point, Refkin, a lot of people are pointing out, like, yeah, if I'm sitting at a 3% mortgage rate, why in the hell would I sell? Like, where would I go?
Yeah,
Right. Because now I have to pay 7%. Right. And it just makes things, I mean, and in fact, I think you and I talked about this, like, Sonny would get these postcards from agents trying to, hey, if you sell in this market, blah, blah, blah. It's like, but why would we pay more for less house? Like that
yeah,
literally makes no sense. Right.
yeah,
And that's even if we wanted to. So yeah, I mean, and as the buddy I was talking about, he mentioned this. He said, listen, buyer demand is kind of back. Right. Because buyers apparently have kind of psychologically adjusted to, all right, 7%. You know what I mean? Like, okay.
yeah,
And as we in the industry have been pointing out for a long time, it's like, look, this is still kind of historically low rates. I mean,
for sure.
80s, 90s, like rates were 18%, right? So, yeah, seven's high, but it's not that crazy. I
No,
mean, I
my
think
first
you and I
condo was
talked about
seven and a half percent, right? I mean, yeah,
exactly. I remember my first condo was, I want to say it was about 7.25, something like that. So it wasn't. So I think buyers have like, okay, I'll deal with it. It is what it is. I think it's the sellers who are like, I'm not selling. Like nobody's selling.
yeah,
Right? Nobody is selling unless they absolutely have to. Right? Like estate sales. Like,
right.
hey, grandma died and now we have to sell our house and none of us want to move in there. Or we're getting a divorce and have to sell the house. And even in that scenario, I think you're the one who mentioned this. Like a bunch of divorced couples are going like, okay, we're going to get divorced. We're going to stay in the same house because we
Yeah.
can't afford.
Good Lord, right? Well, there also was this influx. I mean, influx or outflux of. I know, like a lot of employees who moved out to either Texas, or a big place was Tennessee, because they had their home in California. They could sell
Right.
that at a big profit, and then know that they would
Right.
get a bigger house in, let's say, Tennessee at a good interest rate. Well, even
Right.
that doesn't even make the math doesn't make sense anymore at these kind
That's
of
right.
higher
You can't
rates,
move
right?
back.
So you don't have.
Yeah.
I mean, it's just all sorts of ugly out there on that
Yeah.
kind of level.
Yeah. And
And when people don't have
right.
a lot
Like,
to do, they just if I'm sitting around where I was busy and I'm working, and these things come up, issues come up, and I just overcome them to get my work done.
right.
When you got
Right.
nothing and you're sitting around here, you just start pointing fingers, looking for problems,
Right.
looking for ways to bitch, right? I mean, for sure.
It's, And I have to imagine it can't be pleasant right now being like an MLS executive, association executive. You know what I mean? Because, yeah, people are just angry. They're scared. I think they're just stressed out. And it does remind me, if you remember during the first bubble crash, when real estate really tanked, like 2009, 2010, dude, there was, I mean, it's just something I guess we don't really talk about as an industry, right? Because real estate, and we tend to be just optimistic, upbeat, positive, hopeful, like to your point, to manifest that energy and all that shit.
Yeah.
But there was a lot of psychic damage that happened in that bubble bursting. I mean, I personally know a few realtors who just kind of, I don't know how to put it, like they never recovered. They were not the same person after going through that, right? And I just like, there are veterans, people who lived through that. I mean, do you think they're doing any better? Like, are we doing any better because we lived through that trauma and now we're like, okay, I've been here, I've done this. Yes, things are gonna suck. Yes, cut. Like, are we better off now? Are we more resilient because some of us lived through, the first bubble? What do you think?
Yeah. I mean, it was such a different circumstance with that, right? I mean, the whole, and rightfully so, some people have, I mean, agents, the rating agencies, brokerages all had a hand in that, right? With this ninja loans
Sure.
and everything else like that.
Sure.
And then there was just such a, and think about the whole world was going to shut down, right? So that the GFC was something, was beyond real estate too. So it was just not in real estate. So I think that was a bigger deal. Now it's just such a different thing with this inventory being so low. And then it's just a confluence. I think we've talked about this before, where it's just a perfect storm of stuff with inflation, with the inventory, with COVID, and everything we're going through. It just all comes up to be some sort of like horrible situation for what we're doing. And then affordability, like we talked about last time. I mean, because of supply and demand, for some reason, home prices still keep going up. Right. I mean, well, not for some reason.
I think Redfin
for
just posted that home prices fell, right? I like literally March was the first time. I think they said,
right? But yeah.
Yeah, no, I said nationwide it was like down 3%. I think Boise was down like 16 or 18%, but I think nationally it's the first time we've seen it. And I have been tracking it because, my whole thesis around home prices are just tied to money supply. And we did shrink the money supply just a tiny bit in recent months. So we are seeing home prices drop, as well. Having said that, affordability is still not good, right? In other words, it's not like people are like, oh, it's down 3%. Yeah, well, home prices went up like 200% between 2020 and 2022. So down 3, like we went up so much and it has to come down way more than 3 for things to get affordable. But if you do that, then all of the people who bought, they all suffer. So all around it's misery, right? All around it's misery. And I'm just wondering. Yeah, go ahead.
No, I mean, the other thing is I think everybody wants to kind of like, okay, what's the new normal, right?
Right.
When do we get to, and it doesn't seem to be in sight, or when we think there's something, another thing changes, whether the economy or something else, we're just, well, that's okay. This can't be it. So what is it going to be? And a lot of people want some stability or something to kind of say, okay, this is where we're at now. But it's just everything's still in kind of a chaos kind of mode, I think.
For sure. And I think it's going to get worse before it gets
nobody knows
better.
what the future, I mean, again, it's like so weird. It's like you'd want to look back at things and say, okay, well, we're here and we're going to be there now. But I don't know what the future looks like in a situation. It's hard to kind of, everything's so connected. Everything's so complicated.
But you're the optimistic one, remember?
Yeah.
Between the two of us. Although I think I'm white-pilled. I think I'm way more optimistic long-term than you are. But since you are supposed to be the optimist of the pair here, well, give me your take. What do you think the new normal is and when? And again, let's just preface this. Neither of us are economists.
Right.
Okay? Neither of us do this sort of thing for a living or anything. So this total guesses of two random guys on the internet. But we do think we know housing, better than most. So what do you think the new normal is and when?
Yeah. I mean, what is going to affect supply, right? And I think both you and I agree
A
we're
lot of
never going to
death.
see.
A lot of death.
Yeah, hold on. Now we're going back to our roles here. I mean, we both I think agree we're never going to see 5 or 4% ever again in our lifetime, right? I mean, it's just not going to happen,
We're
right?
taking mortgage rates.
Yeah, I just
Okay.
don't see it. Um, I guess maybe it's this silver tsunami people talk about, where the boomers, this massive shift of wealth has to happen, where, and that I guess that goes back to your death. I don't know if that's what you were alluding to, but
Yeah.
that shift has to happen, right? Um, I mean, that shift has to happen maybe for that kind of be. Now, I don't know. Maybe you follow this more than I do as far as when are those kind of things supposed to be up? When is that going to go down? And then you read like none of these millennials or Gen Zers want the big McMansions that the damn boomers all bought
Correct.
anyway, right? So you're going to
Correct.
have maybe all this inventory out there that nobody really is interested in.
Correct.
So I mean,
Correct.
I would probably have to tie a new normal to that shift of wealth a little bit for things to kind of really
Okay.
take effect. And I don't know what the numbers are on that, right? I mean, do I think that supply is going to change, inventory is going to change next year? I don't think so. I mean, do I think that there's going to be, well, I think we'll see an interest rate stabilize, right? But
Around. What do you think is
it's
stabilizes
got to
to?
be six around the sixes,
Around the
right?
sixes? Okay.
6 and 7, maybe. I mean, I think everybody wants it to be 5. I just don't think that's going to be possible. Um,
Right.
we have a bet going here. What's going to happen at the next Fed meeting, right?
That's
I
right.
don't know about meeting, but announcement. I think it's
Yeah.
going up a little bit. But
I think I said it was either
yeah,
a pause or or pivot. So I'm probably going to end up buying you dinner, which would be great. I would love to do
yeah,
that. So
fantastic.
yeah. But I don't know, man. All right. So for myself, I think the new normal probably looks like home prices down somewhere in the 30% range.
Yeah, that's just. I mean, that's not going to happen
I
on the
know
coast.
it's like end of the world type scenarios. I think it's going to be around there. I think mortgage rates are probably closer to 10. You know, uh, and there's two scenarios where that happens. One is the Fed pivots, right? So they start cutting rates again. But weirdly enough, I think that the mortgage rates aren't going to come down. And here's my rationale on that. And I hope I'm completely
Well,
wrong
you
about
said
this.
10%. How? I mean, down from 10 or
No, like that's what I'm saying. Like mortgage rates will be somewhere around the 10 or like pretty high, right? And even though Fed will start cutting rates, right? And I'm saying like here's a scenario, and I hope this doesn't happen, but this to me feels like the most likely. Because okay, Fed will cut rates, and they'll be like, okay, we got to reverse, like we got to avoid a Great Depression, right? Because we're clearly heading towards a real hard landing from a recession standpoint, right? So we're going to try and stimulate the economy again. The problem I see there is the bank failures, because this is a new thing, right? That we didn't see at the beginning of this year.
right?
Nobody expected Silicon Valley Bank to be fucking failing. Nobody expected Signature. Nobody expected First Republic. Nobody expected any of that, right? So it seems like currently what's happening, the trend right now, and what the economists and analysts are sort of predicting is a lot of the small and regional banks are probably going to go under, right? Because depositors will pull their money, and either for safety, they'll take it to one of the big five, right? They're too big to fail, or they'll pull their money and they'll put into money market funds. They'll do other things. So like Americans have woken up, especially business owners, right? Because the FDIC $250,000 limit, it doesn't. I mean, that's good enough for whatever 95% of American home families, right? It's good enough for me. But if you're Greg Robertson and you have a lot more than that, in the or really more precise, it's the businesses, right? It's not the individual. It's the you have a construction company, you have a restaurant, and now you need like, okay, well, it turns out if you keep more than $250,000 in a bank, which a lot of them do to have working credit, right? It's not like you have $200 million in the bank. Seems like a huge amount, except your payroll is 800,000. Do you know what I mean? Like, it's that kind of stuff. I think those people are all going to go, you know what? We're pulling out of our local SNL or whatever small bank, and I'm going to put it into Bank of America, right? Because I can't have my working capital be affected, right? So I have to go to some too big to fail bank. And the problem with that, of course, is I think a lot of the mortgages, to me, the lending actually happens from the small regional banks. That's been our and this. And if mortgages are, so if those small, whatever banks are like, hey man, we're all about to go out of business. Are they in the loan making mood at that point?
Yeah, no.
Right? Some guy comes and says, I want to borrow money for a mortgage. Are they going to be like, yeah, let me underwrite that loan, even though I think I might be going under? Like, I don't, like, that's a real problem, right? So then we're saying, okay, we're going to count on the big five, like the really big, too big to fail banks to start doing residential mortgages. Like, maybe, right? But if they do, are they going to issue them at the 3%, 4% that, that we've seen in the past? Or are they going to be like, yeah, this shit is real risky. It's 30 years long. And that's what killed Silicon Valley Bank. Like, again, if you read through, some of the reporting around it, the thinking was that they could have been fine. They actually had a very strong balance sheet, but they invested a lot of their money into treasuries and mortgage-backed securities, right? Which everyone thought was the safest securities, but it was a duration risk. Okay, you have mortgages, but it's paying 1.75 and it's 15 years to maturity. And, you're literally losing money. It's not worth anything.
A conservative bet.
Correct.
Right? I mean, but, when everybody's pulling their money out and you've got that tied up, I mean, it didn't turn out to be that.
That's right. And then the value of those bonds aren't,
Yeah. And one thing to mention is I've been reading about is this upcoming commercial loan crisis, which affects
it's going to be a disaster.
The smaller, the smaller banks as well, right? Where these leases are coming up and people are going to start defaulting on it because they don't want.
That's right.
Those leases, right? So they want to renegotiate or whatever else. So I mean, it's a ugly out there for sure.
So if that's my thing, that's my kind of what I think is like the next shoe to drop is if the small and like regional banks really get hammered, I think what it does is it starves credit availability for mortgages. And if that happens, then I think we have a scenario where we could have lower rates overall, but mortgages in particular might be 8%, 9%, because the bank's like, we don't want to take this risk, right? And if I write this loan, the issue is going to be there's now a 30-year mortgage-backed security attached to this, right? And to get an investor to buy that, knowing what happened to Silicon Valley Bank, knowing what happened to a lot of these banks that bought mortgages or MBS at 1.75, they're like, nah, we're not touching that. If we're going to buy an MBS, we want a 30-year bond that's going to pay 8%.
Well, but to be clear, It's not like the MBSs were a bad investment. It was just the scenario around, how these kind of interest rate hikes have done to the treasury bonds, right? So it's not that housing is a bad investment, not that these securities are a bad investment. It's just the scenario of what I don't think the unintended consequences that all this stuff happened, right? So
either unintended or intended, because Fed knows it has to crush housing in order to get inflation under control.
Yeah.
Right. Like the other thing, like again, I mean, can we be honest about this? Look at CPI gains. March print, I think, was 5%, but it was above what people expected. Well, why was it above what people expected? Because of shelter, right? Because of housing costs and rent. Yeah. Okay, well, fine. You're not going to get CPI under control until you crush housing. Well, how are you going to crush housing? No, you're right. It's not like banks were buying them because they were the really safe securities, right? You're not buying stock in Tesla. Like you're buying really stable, good as gold, mortgage-backed securities. It's just that it's paying 1.75 and now interest rates are 3. It's worth, 30% less than it was before. And it's that whole thing. So I'm saying, okay, fine, going forward, if I'm a bank manager, right, if I'm a bank executive, and I say, hey, we need to invest this money, is we should invest in mortgage-backed securities. I'd be like, all right, cool. I want to make sure that those mortgage-backed securities are paying a high enough rate that I don't have to sell them if the Fed goes back to raising rates.
Right.
So you know what? Give me 6%. Give me 7%. I'll buy those, right? Because I'm not expecting the Fed to go to 11%, right? Interest rates, and all of a sudden my bonds aren't worth what I paid. So I think that potentially drives the idea of lower interest rates overall from the Fed, but higher mortgage rates, right? Because the mortgage-backed securities buyers are going to be real skittish about buying those, right? Even though, to your point, it's a really safe investment, it's really good investment. It's just a rate risk and duration risk, right?
So,
and then
let's circle back. So, we're having this kind of psychic crisis with brokers and agents because of what's going through. If you're a broker or agent, let's just go to an agent. What can you do right now? I mean, I've always kind of posited that, you know, as a real estate agent, you should be more of almost a wealth advisor, maybe, and look at housing not from just purchase, but from, you know, helping people find homes, whether it's a rental, doing property management, kind of diversifying what you do into other ways, while all this other things, providing value with what you know in other ways, with this network of people that you've helped out, right? So, and that goes back to these what are the predict? I mean, we track kind of the NAR membership, and it really hasn't gone down that much, right? So,
and it won't yet, because again, a lot of people paid up for the year. We have to see what happens in November, December of this year.
Right.
So that's on the membership side. And here's the thing, man. I don't know that I feel comfortable telling agents what to do, right? Like, I mean, I don't know, like talk to your advisors, talk to your family, but at a high level, I mean, I think we can make general claims just by looking at what everyone else is doing, right? You've got to cut expenses.
Right.
It's not like Open Door wanted to lay off 550 people. They're just like, shit, we got to cut expenses. We're going to trim payroll, right? So then you have to, and then as an agent, I would have to ask, like, what are your expenses? What are your biggest line item expenses? I'll tell you one thing I will say as a result of this is, and I've been predicting this for a few years now, so I feel like, okay, it's like starting to come, whatever, because I'm always too early. But the 100% shops should see a real gain. Because one of the biggest expenses of an agent is going to be the broker split. Okay, I'm an agent. My shit is down 25%. I'm looking, where am I going to cut? Probably one of the easiest things they're going to look at is, well, I don't want to pay a split anymore. Right? So that's going to cause problems. That'd be one. Another one might be things like prop tech, like what kind of tools? Right. I mean, agents are constantly like, okay, well, I'm going to try this tool. I'm going to try this CR. I'm going to try that because it's maybe going to, and what's the classic sort of pitch by prop tech vendors? If you just sell one additional home a year, then it more than pays for this product, right? Yeah. Okay, if they're like, well, I'm selling 3 fewer homes a year, so maybe I don't need to pay $49.99 for this thing anymore. Yeah. So there's
I think that agents got to double down on their technology is what I think they should do, Rob. That's
Of course you do. I
feel now, having said that, some agents are vendors out there, right?
Here's the thing: some agents are actually going to do that. So if you think about, like, every time we've had this real downturn in the market, the better agents and the bigger agent teams, they've really gained market share. They tended to do better because, to your point, they're doubling down. So, okay, everyone else is scared. I'm doubling down. So that's going to happen, right? But as a general man, I'm like, okay, it's cut expenses, and then it's going to be diversify revenues. Like, to your point, maybe go into property management. So I've been telling brokers to go into property management from 2 years ago, I think, and none of them have, as far as I know. And a lot of things I've heard is, yeah, but that's a lot of liability. It's really risky. We don't really want to do it. All right, that's cool, man. Don't do it. Now your revenue's down 40%. What are you going to do now? Yeah. It's one of those, and people are going to do those things. We know that. But it's not a should, right? Like, what should agents do? To some extent, you can't. you can't help yourself. Like, you just got to stick to what you do, right? Make more phone calls, right? Do more lead gen, like serve your clients better. It's going to have to be that. Now, obviously, as a biased, since you made the biased statement about prop tech, as a biased, operator of an auction-based MLS, I could be like, hey, you could look at auctions where you could go to listing your sellers and say, hey, how do you like 0% listings? But you're gonna have to. I feel like for an agent on the ground, it's sort of a maintain your mental health maybe more than anything else, right? Like, do what you can, and then try not to get completely bent out of shape about things you can't control, right? Like, if you're an agent on the ground, let's say you're a great agent, you don't control interest rates, you don't control mortgages, you don't control bank failures, you don't control recession, you don't control any of that. It's like, what do you control, right? And bitching and complaining to your broker or to the MLS deal associate is not going to generate $1 of revenue for you. So it's like, what can you control? Make more phone calls, right? Like, do you know what I mean? Do more conversion. Like, it's like, it's just,
I mean, people are still going to have to move, right? There's those 4Ds, right, that we talk about all the time. It's just that,
that's right.
On top of that is not going to happen as much as before, right? Especially the crazy times we've just been through.
Yeah.
With COVID and everything else. So, I mean, it's not like people still have to move for a lot of different reasons. So there's still something out there. But you're right. They just got to re-examine their business and see how they can weather this. I just wish, and I guess nobody has a crystal ball here, but I just feel in the past we like, okay, we know what's going on. This is what's going to happen. And then this is going to happen. Right. I mean, I know that real estate has always been cyclical, although it's been going up for way beyond the average. But just to see a way out of this, because things are so complicated, it's hard to grasp. It's hard to grasp.
Yeah. And I think, so I'll make this general statement as well, which has been a long held thesis of mine. Real estate has been going up for 20 years, 30 years, because we as a country have just completely blown out our money supply. It's money printer go burr, right? And I think I've showed you the charts that show home prices almost identically track money supply, right? Okay, if that's the case, then home prices are probably going to fall if the money supply falls. And the money supply is most likely going to have to fall, right? Otherwise, it's stagflation. I mean, it's those types of things. So when I look at it from an agent perspective, you can't control any of that, right? So it's just focus on what you can control and then maintain your mental health, right? Like, yeah, I get it. I mean, we're all feeling like we're all in the same boat, the anxiety, the fear, right? And I don't know, maybe it's meditation, maybe it's prayer, maybe it's, pick up a hobby, get your mind off of like all the anxiety. It's like, it might have to be something like that. And maybe the agents and brokers who lived through the first bubble, maybe the most important thing you can do now, because I can't remember, you gave me a stat, some percent, like 70% of agents working today have never lived through, the bubble.
Yeah.
Is that about right?
I've been trying to source that stat too, because I heard it somewhere else, but I haven't been able to source it. But I think it was on a Tom Ferry podcast, but maybe. But
we know that a huge chunk of agents working today have never lived through, that whole collapse. So maybe the brokers and agents who are maybe older, a little bit more experienced, who lived through that, maybe one of the most important things you can do is start talking to those agents about mental health, about, like staying grounded, staying focused, like survive, like psychologically survive. Like, okay, you didn't get that sale. It doesn't mean you suck as an agent. It just means the economy is what it is. Something along those lines. Maybe it'd have to be that. I don't know. Like I said, fucking drum circles, like pot's legal, go, like,
Well, okay. I think we're winding down here on that one. Then that's good. Maybe we should give a little. I will say that next week we have a special guest. I don't think we'll.
Yes.
We'll just leave it as a tease there. So we're going to be recording that, I think, this Friday, and then I think that'll be available for listening as people go into mid-year. So kind of excited about that. And we'll maybe get off this doom and gloom stuff and talk about some other subjects here. So
Here's the thing. Like, okay, so with mid-year coming up, and because mid-year's coming up, and you and I are probably not going to be able to do a preview episode of that,
Yeah.
right? There's a part of it that feels like, look, there's a difference between doom and gloom, right? And I don't know how to put this. Like, let's call it grounded optimism. So let me try and explain what I mean by that. If we get together at mid-year, right, and only thing that happens is more rah-rah, more, just like there's no basis in reality for thinking like, hey, no, the market's going to be great in Q4. Why? Well, because, because. Or it doesn't matter how bad the economic conditions are. As long as you are focused and you are doing what you can, then don't worry, you're going to be great. Like, do you know what I mean? I feel like there's some room for saying, okay, here's what's happening, right? So what can we be like, in other words, like think about a way out, way through all that gives you some grounded optimism, right? As opposed to pretending like this shit don't exist, right? I'm hoping we're going to see that. Like mid-year, that's a pretty big issue. And we've talked about it before in this podcast. I don't understand why NAR is not doing some special closed door leadership only meeting and laying out exactly like, here's what's going on with the lawsuits, guys, right? We don't want to scare the average member, but you guys are presidents and CEOs of Realtor Association MLSs. You should get like, here's what's realistically and genuinely happening.
I did have somebody reach out to me with a theory on that. And
okay.
And the theory is that NAR can't do that, maybe because they're afraid of these people that would be in the room that they would want to have some confidence and not really blab about anything would actually say something, and then that would be out in the kind of into the ether now, right? So it's like it's more of they've determined that there's too many leaks that could happen, so the best strategy is not to give a lot of that information right out, and stay to their game plan. I don't know if that's a smart thing or if that's really even relevant, but
yeah.
I mean, I think that was a theory given to me why they haven't been that open.
Sure, that's a reasonable. But then same thing with like economic forecasts, right? Like now's not the time to just like if you genuinely believe things are going to be great, then fine, do that, right? But if not, like now's not the time, right? Like we actually need to be a little bit more grounded in reality and look at the negatives. That's what it is, because it doesn't mean we're all going to die. It means, look, here's what's happening. So therefore, here are things we can think about. Here are moves that we can make. Like, I don't know. Like, I guess I'm just generally hoping the way out of this sort of malaise, the way out of, to use you and President Carter's phrase, the way out of this malaise is not pretending it doesn't exist, right? The way out of it has to be, okay, we're aware that this exists. What can we now do, right? What are sort of reality-based strategies and tactics we can employ, and I don't have all those, like, I don't know, like maybe like, I'm a consultant still. So like, give me a call if you want, but then I'll talk you through it. But the one thing I do feel pretty strongly about is, okay, mid-year's coming up. Just whatever conversations we're having, let's just base it on some sort of mutual agreed basis of reality, right? And again, I could be wrong. We could all be wrong about what's going to happen, and you could just say, "Oh yeah, that's not going to happen." Whatever. You're doom mongers. Okay, cool. I hope I am. You know what I mean? Like, I don't want to see any of this stuff. But this notion that well, millennials are growing, so they're going to do family formation, and therefore it's going to pull us. No, it's not. It's just not. No, that's just fantasy. Like grounded in some sort of reality. If you're going to talk about millennials forming, doing family formation, going to drive housing growth, then at least you got to look at millennial marriage rates, which is not happening. That's kind of what I mean. Like, let's get a little bit more grounded on reality and then be optimistic, right? That's kind of what I'm hoping will happen at mid-year. I'm not going. Are you going?
Yeah.
Are you going to DC? All right.
Yeah. I mean, the feedback I've gotten right now is that I think, at least from the MLS world, I don't think you got an ongoing lawsuit. They probably don't want you to say anything that's could be used, used in the case, right? So I think a lot of MLSs are like, what are we going to talk about here if we can't really talk about the things that we
Right.
need to talk about, right? So that's
Right.
and I understand the reasons why, right? That makes sense. So there's that. But I mean, the other thing is that, maybe this is a little bit contrarian, but I still think that there's a chance for this suit to be settled. And with some changes out there, but still basically the tenets of organized real estate still being there. So maybe
Okay.
that's some optimism, but we'll have to find out.
Okay, but then let's base that on reality. If you want to do that, and the MLSs can't talk about anything real, you know what? Maybe invite one of the lawyers for the plaintiffs and be like, "Hey, what would it take for us to settle this?"
Well, those are not. I mean, those negotiations happen with lawyers to lawyers, right? I mean, I don't think.
Of course they do, but that's what I'm saying. Why not? I mean, look, if that's what it is, why not invite them? Like they could just say no, right?
Right.
Or at least then have that conversation. The MLS should get together, invite some third-party lawyer who's not involved in lawsuits, right? And then the conversation should be, okay, what do you imagine as a legal expert in antitrust law who's done this sort of thing before? What do you think a settlement could look like? Right.
Well, that's an
like at least have
thing.
that conversation then.
Yeah, I mean, it's like that would be an interesting podcast to listen to, and or an article to be written. Like, so maybe somebody at Inman News or somewhere else can say, let's ask 3 former DOJ. Didn't like CMLS hire some of these former DOJ attorneys? Like,
and FTC lawyers. Yeah,
give us 3 ways that this lawsuit could be settled. Right?
Be,
and then have them lay it out. That'd be an interesting kind of thing to listen to. Maybe some former mediator or something that could talk about how this could be settled, right? And then that's I think an article or a podcast people would listen to for sure.
Yeah. No, I agree.
Maybe we should.
I just hope it's not.
I mean, I got to look back and see who they actually hired. I mean, that would be an interesting. Maybe we could reach out to them and say, "Hey, we'd like you. Can you give us some examples of how you can see this being settled, and go from there, right?"
Yeah. Hey, look, we know Danae and a bunch of the CMLS people listen to this. Look, if you guys are hearing us, we would love to host that conversation. And Greg can be the real positive one.
Yeah, this is less a DOJ thing more than anything, because this doesn't really involve the DOJ. So maybe it's something outside the DOJ. But some attorneys that are that handle these big lawsuits and stuff and do these settlement.
But look, at a minimum, those 2 attorneys are antitrust experts. They've worked at the DOJ. They've worked at the FTC, right? So look, so let's just put that out there. Hey, if you guys are willing to have them on our show, we would love to interview them and ask them these questions. What is the way forward here, for the industry? And since you guys aren't involved in the lawsuit, there's no reason why you couldn't sort of give us your honest opinion about it and
I like that.
have a
That's
discussion
a good idea,
about
Rob.
that. That would be awesome. All right, man. So we try to keep it as upbeat as possible. I'm trying. I'm trying real hard. Right. And my upbeat is optimism based on reality. That's my upbeat. Right. My upbeat is essentially the same version of my prepper mentality. Like, okay, you know what? Even if like hurricanes come in, if you're prepped for it, you have a little bit more chance of optimism. But if you're like, oh, the hurricane's just going to avoid us, like that's dumbass. Like you don't do that. Right. And I'm suggesting maybe that's the way forward as an industry. Just this floating anxiety and this angst and this fear. Maybe the way you deal with it is like reality-based optimism. Hey, you know what? Here are things you can do to prep. Get some water, get some food, get some ammo. Like now you have some, all right, things could still be bad, but I feel better about myself and my family. That sort of thing. That would be the approach.
Absolutely.
So cool. Let's leave it at that. I can't believe we worked a prepper into that. We need to do an episode about prepping one of these days. We should invite a prepping expert and do that.
Prepping end of zombie apocalypse.
Yeah. Actual prepping.
All right.
Yeah.
All right.
Yeah.
No, I have a lot of questions, Rob. So I would love to have that podcast with you.
Yeah, I think that'd be awesome. Okay.
All right, man.
Well, Greg, enjoy your hotel sojourn, and please succeed in your shuttle diplomacy, because world needs peace.
I don't know where you think I'm diplomacying anything here. So I'm just.
All right. Well, thanks, everybody.
Thanks, everybody.